Hey, are we live? Are we live? Hello? Hello? Are we live? Hey, what's good morning? Good morning, America. It is 10:14, October 14th, 9:16 a.m. It's been crazy in this market the past couple days. Today we will have Powell at 12:20. We have some levels to go over. We have to update our journal. That's huge. You want to keep up on our journal. Our journal is important. It's our lifeblood. And we want to love it. And we want to show that we care for it. And we appreciate it. So, good morning to you. If you're watching, if you're listening, if you're lurking, good morning. So, we're going to go over the notes from yesterday. Today, we had Trump at 10:30 and at 1. He got glazed at 1. Big time. They tossed him around on both sides and glazed him up really well. Made sure it was nice and shiny and sticky. All puns intended. No pause. Fast forward. And yeah, India should be fucking looking at whoever was doing all that talking yesterday because that shit was crazy. Fucking looking at whoever was doing all that talking yesterday because that shit was crazy. Today we're looking to break outside of this range right here, 667 for the high and 636 for the low. So a lot of the contracts that I'm looking at is going to reflect that. Both ranges actually. The high for the top of the range, we're further away from that. The lower end, we're closer to that right now. All right, I'm having my morning coffee. So for the SPY, we had a low pre-market today, 654.72. QQQ 59205. Those are our targets for the up. Today we're looking for maybe a gap fill reversal, or maybe even I think this might go with a 1220 price point. That's going to turn us over in the market. That's going to be finished around like 1 o'clock, 1:30. So what that means is Powell is taking over the second and third part of the session. Yesterday we kind of went both ways. I was really confused, so I really didn't write too much. The 664 contracts did really well yesterday, actually. They hit like 300%. They did really well yesterday. They hit about 300%. So we did have a winner right there. Uh, but on the other side, the puts really didn't pay yesterday. And they weren't paying. Because when you're working on the second half of the day, you have to change the contracts. I hope you're taking notes. If you're watching, if you're listening, you should always take your own notes. I have all of this in my notebook and I always add. I add every single day. There we go. Past 1 p.m., don't use 0 dates. Go 1 day out. That is law. That's law. It's law. Law is the law. Do not break the law, especially of your own rules. What's the point of rules when you don't follow your own rules? Yesterday, the timetable was pretty evident. It reflected that they had a run up from 9:30 to 10. No high day reverse, but they still ran that thing up. Run up still from 11 to 12, still run up. 12, it had a breaking structure at 107, breaking structure going down. So it was the run up from the 11 to that one. Those are trades, by the way. So there's sequences, the way the market's being traded, and they trade them in those sequences. So you have to be careful of which sequence you are in when you are trading. You know, time of day matters because messing with option contracts is theta. I'm looking for something specifically. I'm looking for let's move this over a little bit. No, move this over here. No, yeah, that was good enough. I want to make this too small. Oh, that's fine. Because I think they're going to go out if needed. Yeah, they're going to go out if needed. That's fine. But it's this. I don't want to make too small. But you know what? Let me move on because there's a lot of data I gotta put in. I don't want to have to rush. We have 7 minutes to actually. I'm sorry, I was a bit late today. I had in the restroom. So 665. I've actually updated the online notes. No, I didn't. 66513. No, that was yesterday. No, we don't got this. I'm so confused. I'm confusing myself because I'm rushing. I'm sorry. I'm looking for my pre-market levels. I'm looking for my pre-market levels. They're not showing me. I think so. This is just pretty much. It just dropped. So this is 663. 66. No. Yeah, 663. Yeah. All right. So that fell from 6,300. QQQ. I'm so sorry that I am just all over the place. 6185, 601, 85. All right. Because they are very important points for us to know. Okay, so we don't have no open, no close. Boom, boom. This is yesterday. So I will update. Nope. I wrote yesterday's info down. You see, this is Monday, 10/13. All right. Yes, 13,659.17. Our open 660, 60. Oh, oh. Why am I writing this? That was weird. My numerical pad isn't working. Oh, I hit numlock somehow. I'm like, what? I don't know why I didn't just go there. Okay, all right. So yesterday, here's our yesterday's notes. 10/13, SPY QQQ. We're still in this box range, by the way. Just want to copy that. All right. So we want to go in. Oh, no, I can't. Oh, it's okay because we're going to get all that anyway. We want to copy. We're just going to work from the top down. Tuesday. 14. Breaking news. The reason why that was breaking news because that was like new. That was new to me. All right, POW at 1220. Boom. All right, we want to get rid of these levels. These levels. We want to keep that box range. Very important. What time is it? 27. Okay, we can get these in. All right, let me turn this page 663. 601, 601, 85. My handwriting is absolutely disgusting. Sometimes. Yeah, that's high. This is low. 65472. And our QQQs 59205. All right, boom, boom. Keep that. We have. This is a gap down. Gap down. What time is it? 28. All right, we have roughly 1 minute. I will put my contracts in shortly because I want to get ready. I do have my contracts ready though. They're all ready, so we are ready for those. All right, we got this bad boy. Markets open 120. Let's get some more news going on right now. Let me get you up here. All right, 29. We are getting ready. This looks like this thing might do a little sell off. Ding, ding. Ding, ding. Oh, let me get my Sims in here. Oh, yeah, no, they're already done. Every put that I had in my level is already freaking huge. I mean, massive. So, I mean, that's done with. All right, here's our gap down right here. Gap down. Yeah, these guys are going to be up. Ooh. Huge gap down and going. Yeah, all those contracts that I was nope, nowhere near that price. Nowhere near that price. Nowhere near that price. So the contracts that I had they're all, I mean, hugely up right now. So this is just a freaking just grab and go. Grab and go. grab and freaking go, boy. Sheesh. Sheesh. The contracts I was looking at. Oh my God. I was looking at the 660, the 659, and the 558 put, but this was last night at like 12 something. I mean, as you can see, all of those are, of course, stellar. But that was at 12 something last night. So this is something totally new. I am okay with those. So are we looking for a reversal? I want to get ready for the reversal too. Cause oh my gosh, every one of those contracts is so expensive. Alright, I'm happy with this. I'm not doing much until like 11 something, 12 something, me personally. I mean, you do have to market. I mean, you do have to see what's going on. You see, you do have to, make a play. I mean, there's so much protection you can do. I'm a cash trader, so I'm all cash. I don't have to really focus on too many positions. But for other people, it's a different story. What's going on with the Qs? The Qs are still dropping. But these puts are just up like nasty. Damn. You know what? I have to. I absolutely have to. I feel compelled. But we don't want to play these actually. We want. I don't think we want those. I think we may want these. A little bit more expensive, but a lot more safe. I don't know. I don't know. Trump can come in here later on. This is why, you know what? I want to, but I won't. I want to, but I won't. I really do want to so freaking bad, but I won't. Because let's try and make some sense about everything that's going on. Yes, we are dropping like a rock, like a freaking rock. But at like any point in time, mm, you better make that money. I always tell people, you better make that money. You better make that money. This is incredible. Incredible. This is crazy. This is sick. That's sick. Make that money, baby. Make that money, baby. Holy crap. Still dropping. Still dropping. That's so sick. That's so sick. I hope you're making this money. This is sick. This is just like, this thing is like, it's not going to stop. It doesn't look like it's going to stop, like, at all. That's so sick. That was sick. That was crazy. That was crazy. Wow. Absolutely incredible. That's so sick. The market just dumped so hard in that first. Ooh, we're still dropping. We are still dropping. Oh, I saw those kind of early. That's absolutely freaking incredible. Absolutely freaking incredible. Absolutely incredible. Wow, we're still dropping. Shit. I missed that QQQ trade too. We are still dropping. That's crazy. Yesterday was a bull trap. Big old bull trap. There's going to be a point in time. I don't think we're ever going to recover today. I don't think you should buy any calls today. It's not looking like you should be buying any calls, like at all. Wow. Absolutely incredible. Absolutely, absolutely incredible. These things move so freaking fast. So fast. Sick. Sick. Right now, I'm currently window shopping. I'm fishing on some contracts. Wow. Is anyone in here? Did you guys get a piece of that? That was sick. I mean, that was sick. So actually, let's do something. Let's get rid of. Let's get rid of this. All right. We already know what's good with the puts, so we're going to get these puts out of here. Because if these puts are going to put, they're going to put. Right now, we want to look at the calls because the calls are rinsed. The calls are rinsed. We don't want that. All right, that's not bad. We're going to. No, I still want to keep my eyes on these. Actually, oh, but they're going to. Okay, okay. I know what I want to do. I know what I want to do. I want to. Ooh. All right, so those calls are going. All right, that's good. All right, let's. All right, so I'm tracking a lot of percent change. Why do I have a 9:55 alarm on? Total percent change. This is the big part. All right, we are switching from definitely from bearish to bullish. The contracts I'm looking at, they're up 37%, 40%. No, they're all top 30s. I went heavy on those. Well, not heavy, I just went in on them. All right, it's looking like we're trying to fill the gap. Total percent change. Look at that. That's a big V. That's a big V. Okay, I see. Oh no. Ooh, that's a good contract. That was a really good one. All right, we're going up. All right. All right, we're hitting that 10 o'clock hour. But we already had our structure change back here at 9:45. So it looks like they rinsed it until 9:45. That was a heavy 15 minutes. They rinsed it, and now they're rebalancing everything. Now I think they're timing everything to go to POW. So I think they may run it up until POW. They may make it kind of ugly, but then when POW come, uh, that's going to be the next structural change right there. Wow, those cons that I picked them up at the bottom. All right, so we're back at opening print pretty much. Holy shit. All right, so are you going to fill the gap? Are you going to go for the gap fill or no? I think that's a yes. Mm, that was high of day right there too. Mm, that's a lot of weakness. That's a lot of weakness. Ah, That's a lot of weakness. Come on. Come on. So that first beginning candle was an overreaction from someone. Someone went on a big selling spree. Because we just bought right back up into that. All right, that's some strength. That's some strength. Come on. Blow through it. Blow through it. Ah. All right, that's good. That's good. Come on, baby. Come on, baby. Come on, baby. Yeah, these contracts 50%, 60, 70%. Yeah. Yeah. I take that. Take that. Take that. All right, we're moving up. All right. That was a huge jump right there. That was nice. That was nice. That was nice. We're getting paid. If we fill this gap, oh my God. Oh my God, if we fill this gap. If we fill that gap, oh my God. All right. I want to put a stop loss on this. All right, I'm gonna put a stop loss on this at 65. Let's go. Let's put put it at 60. Let's put it at 64. Let's put it at 64. Yeah. We're gonna let that ride. So we got that going. What about this one? We're gonna let those guys. We're gonna let those guys go. But we are gonna put a. We're gonna put a stop loss on everything though. Um, we can put this at 25. Yeah, that's good. And these, let's. We got them for that price. These are really good contracts too. These are really good. I don't want to get shook out, but it's just so tight, so tight. No, we can do this. We're gonna keep them nice and tight. All right, tight, tight, tight. Okay. What time is it? All right, 10 a.m. All right, so we don't got no reversal so far. 9:55, 10 or 10:05. So we're kind of safe. Maybe 10:20. I mean 10:10. We might hit a big algo flip somewhere. But I hope you're making money today. We made money so far on the leg down, and we're making money on the leg up. Realized money. While we're hanging out at opening print. Why are we waffling? Why are we waffling? Why are we waffling? Uh-oh. That's an attack. That was an attack to the upside. All right, we're moving. We're looking to fill that gap. All right. Those buys are really good buys right there. So, like I said, I think they're going to run it up till POWELL. Oh, there's some other tickers I want to take a look at too. And I want to add, actually, I want to add a certain watch list. And this is what I want. I've been doing some math. Is this safe? So here go to SBX right here. Oh, snap. Here go to SBX. All right, so we're going to keep these up together. Russell trying to go green. All right. So let's just chill. Let's just chill. We don't need to keep moving. We do have some really good positions. I was thinking about putting on some stop losses, but it's just so tight. So tight. And the profit margins are nice, and we have a nice gap to fill, and we have time. We have until 12 something, so let's continue with what I wanted to do. I should have done this work before, but fuck, because I'm touching shit. Because I'm touching shit. Because I'm touching stuff. Chill, bro. You're good, bro. You're good. You're good. You don't need any more confirmation. You're right. You're right. You're right. You're right. You don't need any more confirmation, bro. You're right. You're right. That's the thing about, you know, trading. You get instant gratification, whether you're right, whether you're wrong, and immediately, then you can adjust. I do like that instant gratification. I do like being told I was right all the time. I do enjoy being right. I thoroughly enjoy being right. And this is the perfect career for me to be right. And wow, I should be doing way better. LYS. ALB. PLS. SQM. SQM. Um. Uh, can I get this? Gang Fang? No. Done. All right. That's good. All right. Boom. Spy. Okay. All right. We got those. What time is it? 10:23. Wow. I didn't even take a look at Tesla yet. Let's look at these contracts. The contracts are looking good. Oh wow, look at those. Awesome. Awesome. Awesome sauce. All right, so I don't want to have to worry about the upside gap fill. What's up with these contracts down here? Yeah, they're 100%, 120%, 140, 150, 160. Yeah, 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 yeah. I knew I should have bought those when I marked them. I caught those at the low. Oh my god, I caught them at the low. Oh, I would just be chilling right now. Oh, I'd just be buying. I just would use all my buying power already. But I figured that they were going to low us out like that, hit us with the low, and then we're going to go for the upside gap fill. So they can hurry up and fill this. Now remember, they have until 12:20. Past this gap fill, I have no idea what they're going to do. Now we can keep going. We can go past it, but well, actually, I do know where we're going. Previous day low, 659. Ooh, we already hit that. Ooh, we already hit that. What's above it? Opening prints above it. Yesterday's close above it, and yesterday's high is above it. Wow. Wow. So Powell can take us back up there. Apparently we filled the downside gap. All right, awesome. All right. So we're going for some high levels. Let's go 5.3. Fuck. Wow. I can't believe I just did that. I just fucked up. I just fucked up big time. All right, we're going for the gap fill. Those are we're about to hit 200, 250%, almost 300%. Oh, those are sick. Those are sick. Those are sick. Yeah. Why did I? Ugh. I didn't fucking. Oh my god. I didn't stole. I just took so much money out of my pocket. I mean, we're killing it, but nah, that was a fuck up because that's more money right there that I could have had. All right, we have some. There we go. This is UVix. That's good. We're still going. All right, so they took a couple percent off those, but that's fine. we're stalling right now. Alright, I'm just managing some trades right now. Managing some risk. I'm not liking that. I'm not liking that. Um, it's cool. All right, we're going to take a little bit off. We're going to look for the next window. What time is it? So we still got POW. So we want to save some money for POW too, because those are going to be the moves. So I think we're good. We have a great foundation. We made a lot of money. Yes, we did. We made a lot of money, and we still have some money, a couple bucks left over for POW when he's ready, and we still have trades in the positive, in the green. Where's my horn? This is all positive news. This is all positive news. This is sick. I'll take it. I'll take it. I'll take it. We got some contracts, plus 50% on them. You see, but I wish, yeah, you see, but that's why you can hold through stuff like this right here. You know, you bought them for nothing, and that shit fucking just crazy. You know, you can just let that shit just ride and be cool. So let's update our little heat map right here. So we dump until 9:45. Uh, dump till what time is that? 9:45. Till 9. Oh, okay, whatever. Redundant, but whatever. So we had a trade from 9:30 to 9:45. Then we went from 9:45 to 10:30. 10:30 structure change. Structure change down. Down, Dune. 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 I guess the W is silent. Dune, it would be down instead of down. It'd be, yeah, no, do, because it's doing, doing, doing. All right. Um, that's good. That's good. That's good. That's good. But I did sell for some protection. Doing the right thing. You see, but I was late on those. I was late to some of those contracts, though. I was like, damn, they were spent, but I knew, I knew, because look at my notes. The 666, 665, 664, and the 663. But last night they were totally different prices. 64.3. 4.3 was the 5.6. I didn't miss the 5.6. Yeah, I do got the 5.6. 5. No, no 6.5. No 6.5. I have the 6.58, 6.57 call, 6.59 call, and the 6.60 call. I got those when they were not those prices. So now when I do it like this, it's like, okay, this is the range, this is where we're going, okay. And this is the price. How much do you want to spend? And that's the cheapest one. But I bought those when these were 15. These ones 34. Alright, boom. That's good. Alright. I like this. Wow. Wow, wow, wow. So I see some of the no, I can't say mistakes because I definitely, I made a play, learned from them, went out. Those were different. It's all about the contract that you get. You gotta buy the right contract. The right contract at the right time, and then you can go from there. I gotta go make some breakfast. I wasn't late today. It's just, well, no, I wasn't late today. It was I was having a technical difficulty with the charts. I didn't know how to get my quotes back in with my charts because yesterday I was trying to grab the window and I guess I was clicking on something up there and moving it, but I know how to do it now. You have to treat them. There's an indicator to where you can merge, what you want to merge with what, how you want to view them and everything. So I learned that like really quick on the spot. I asked ChatGPT. ChatGPT didn't help me out. I mean, it taught me something else. It definitely didn't teach me what I needed. I was very explicit, but when I just couldn't think of a way to reword it, I was like, I just got to figure this out. Instead of figuring out a way how to speak to ChatGPT, I'm like, like I'm just like want to keep arguing with freaking AI, especially even with a real person. If they're just not getting it or understanding it, it's like arguing. Like they just don't get it. You know, do something else. So I did something else, and I figured that shit out. I'm all about being proactive.
Apple, Meta, Microsoft, Amazon's down a lot, Hood's down a lot, Tesla's down a lot, Nvidia's down. Yeah, if all that's down a lot, they all down a lot. If they start moving, this could be crazy. If they all start moving in the same direction. I think I am going to. Mm, you know what? I think it's confidence in myself. No, it's not confidence because I do have confidence in myself because I'm definitely putting putting real money out here. But they they can at any time they can put a big red line on the screen and it just screws up everything. Nope, I'm playing pussy. Don't give a fuck. It's crazy. The amount of money that I make over here, I'm surprised another YouTuber hasn't seen it and paid attention. Because I know motherfuckers be cherry picking. I know motherfuckers be cherry picking, but it's like, bro, I can make your shit. I can make your shit better. I can make people fucking crazy money. I can explain shit really well. Mm. Look at these two dancing together. SPX and UVIX. Ooh, that's almost tit for tat. That's damn near tit for tat right there. Look at that data. Look at that data. That's data. Hey, data. That's data. That's data. That's symmetry right there, baby. All right. Hmm. See, that first trade of the day is the sweet trade. So we caught that sweet trade. We caught that sweet box. That was that sweet box. That was that sweet box. What time is it? 10:48. We are about to go get something to eat. We're gonna. All right. We are cool. What am I gonna do? Let's turn on some news, I guess. Let's keep these boxes up. I like that box. Give me that box. Give me that box. We can see it better on the phone. We are waiting. They want to fill this gap. They want to fill that gap. They just don't want to fill it up, fill it immediately. They don't want to fill it too fast. All right, we went bearish. We went bullish. All right, J Powell coming live in 40. No, it's like 12:20. We had sort of a. So what happened? What are we looking at? Okay, we're looking at open sell off. Okay, we bought it back. We came up some. Now we consolidating. This is consolidation right here. This is structure. This can be a structure right here. We can see if this is a bear trap to go up. Yeah. Mm. I fat figure fucking twice today. That's crazy. Crazy. There we go. Bear trap set. Bear trap set. Alright, so that was a bear trap. Alright, bear trap. Alright, I'll be back. Uh, I will play some news in my absence. Today's a good day. Today's a really good day. We're definitely killing it. Insane. Oh, oh. Look who showed up to the party. All right, let me get news. I'm gonna go grab some food. I'll be right back. I'm gonna have some food before power. I hope this isn't. You know what? the sound on there. I don't want the sound in my ear either. I'm gonna keep it up. We're just gonna keep it like this. I'll be back. it's like as a coach, it's one thing if you're losing because something is not working out just yet. What is going on? 1106. Structural change. I have a note. I said look for shorts around 11:45 because I figured this would be happening. Gap down, fill the gap. Well, gap down. You don't know how far you're gonna go, so you're gonna play it, watch it. Get ready for the upside. And just that easy. This is good. Mm, that's downside action. No more plays until Powell. Mm, mm. I'm gonna smash most of that. Some bacon and some eggs and potatoes. Ooh. Excuse me. Bloomberg telly. Mm. All right. Buy gold. Subscribers only. I thought I was a subscriber. Powell in Philly. I live in Philly. 20. Mm, 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 mm. So good. And I should buy some snacks too. What are some water ice? Oh, there's that gap fill. We're getting there. You see, they're going to do it nice and slow. They're going to do it nice and slow. Or maybe during the speech, they're going to spike through the speech, and then we're going to blow through some topside levels. Oh wow. 287%. That's crazy, bro. Mm, mm. I already seen all those prices. What? This one is doing all that? Wow. 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 That's incredible. I see these prices all day, every day. I hit these things. I didn't have enough confidence to hit this one, but I had some other ones. But I was thinking about the dollar cost and the average move cost, the average move on the particular contract. Yeah, that one lost some value. Oh wow, look at that. Oh, that's spy. Why is spy right there? I don't want spy. I want VIX. I'm like, what? I'm looking at different things here. There we go. There we go. And here go to SPX. I'm happy I didn't. I was just about to open up another contract. If I lose you, baby. If I lose you, baby. Ha! That's how I got this. I was already in my head. That's awesome. That's so funny. All right, so we are in the second phase of the theta. It is 11:41. So now I would be wary on the contracts that you are purchasing because now, and you also got to think in the day too. You know, 0 dates. I think you have to cut off at like 3:45 or something like that. So just all types of strategies and things you gotta, remember moving along and everything. Please take me away. Yeah. 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 Ooh, 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 ooh. I like Bruno Mars. I dealt to Bruno one time uh, in a casino I used to work at. It was pretty cool. He never hit none of them high notes around me, like live or anything. Crap. I wish I didn't tell you that because there's another story that I wish I can say, but I don't want to attach myself to it, and that's Bad money, bad for business, all that stuff. Even if I don't even go into casinos, it's just I just go out, tell them shit like that. Because I hung out with some celebrities a few times, and when you hang out with people, like, what the fuck you doing, like, just like filming shit and like doing like weird shit. That's how you don't get invited back out to shit when you hang out with like celebrities and and like really important people. Like you don't want to be weird. Like you're just like this normal guy. Like be normal. Like you know. So I was normal and I was cool. I made sure I represented myself well, and we still had fun. I still showed them my personality and everything, and it was really cool. Please take me away, yeah, yeah, yeah. Ooh, ooh, ooh. You wouldn't even know I used to sing. I used to be an okay singer. Sick nasty. We still have that gap to fill. We still have a lot to run and go. I'm sorry, I don't mean to floss in the mic. I'll wait to do that later. I'm sorry, I floss like 3 or 4 times a day. Flossing is very important. Taking care of your teeth and everything. Dentists say that flossing is the equivalent of wiping your behind after you use number two. So if you have bad flossing practices, that is the equivalent of you not wiping your behind after you do your business. So yeah, there's that. All right, this is pretty much what we want to see. This is going to determine if we're going to have a good day or not. This is going to determine whether we're going to have a good day or not. All right. Let's see. We have Pow. 33 minutes and 40 seconds. Proud destroy that. Yeah, I thought this dude was 9:20 Eastern time zone. 9:20? The fuck? That would be insane. If Pow were to ever speak at 9:20 a.m. on a trading day, an active trading day, do you know how scary that trading day would be? That would be freaking disgusting. That would be puts all day. Oh my god, bro. Chill, bro. Why 39 people watching this? If I had you, baby. That's awesome. Those contracts I just bought. Well, I just bought more of them. They're already up 60 something percent. As it is. But we're going to get ready. We're going to get ready for a breakout. I think I want to start protecting towards the downside. We filled the gap. Okay. Gap filled. Market stop We got them for that. We're gonna sell them for this if we re-trigger that. I like that. That's not bad. That, and we're gonna keep one to go. So protection, we have that protected. That's big money. Sell limit, stop market trigger. We got them for that. Oh, sheesh. Okay. 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 All right, we're gonna sell. We're gonna put protection for no, no, 3. We're gonna do 3 on a tight stop loss. We're gonna go 3 on a tight stop loss. I shouldn't have fucking done that. I think it was trigger. I didn't think it was so tight. I didn't think it was so tight. I'm just gonna let these things run. We made money, you know. We still got money left over. We're in positive, all that stuff. Oh my fucking goodness! I can't believe I freaking did that. And you know, if I would have kept these contracts, I'm up 400%, 300%, and that's how those guys are going to get. They're going to They're going to go up like crazy. But all of these are going to fall into play and everything. This, I wish I can. That would be a miracle if I can get out of that. Where's Spy? Spy's up here somewhere. All right, no gap. You see? So this is the whole trading day broken up in 5 minutes. You know, this is essentially this is 6 o'clock. Where's no? This is it right here. So we're right here in the day. You see, we're just out of that first third into that second third. You see how we're just passing to the second third. So those contracts, you know, this is why you have to learn about theta, and a lot of people don't know this. But from like here to there, you know, the powell's coming shortly. All right, we're still moving up here. We're well past that gap fill. You know, I haven't checked any of these MACDs or anything. It's a 15, the 4 hour. You see, we were bearish the first couple hours, and here go us being bullish coming out of that. So now we're gonna get our second four. You see, that was all that. All right. Remember, we picked up all that money, y'all. We picked up all that money, y'all. Oh my god, I sold those so fucking early. Why did I do that? I fucked myself over so many times today. I fucked myself over so many times today. I should at least had one of these guys, two of these guys. Oh my god, that's crazy. You know what? But I've mastered it. I'm mastering it. You know, I'm really good at it. You know, this morning trade, I locked this morning trade down. Honestly, the only thing is like my confidence in like buying some of the contracts and everything. You know, because it's like, you know, you have to go through the mud. You know, essentially. You know, but once you find them, you go. It's a wrap. These Jones right here, I can't believe I got rid of them, man. Oh my God, we still making bread and That's crazy. Them Jones right there. Them that's crazy. These Jones about to start flipping. These are about to start. These are already flipping. These are already flipping right here. They already flipping. This Jones already doing what it's doing. That's what's up. We eating. This right here about to go crazy. No, no. I was a little bit too far out for that one. I should have moved it up. Oh no, it's about to walk into it. Holy shit. It's about I was one off though. I was a little off. If I wasn't so far off, that would have really went crazy. All right, so all my contracts are they're starting to go crazy. All my other ones are already retarded. Oh my god, $55 turned into $362. That's crazy. That's crazy. I was trying to figure out. Oh my god, what's all figured out? Oh my god. Well, we're good. We're up there, y'all. The contracts I got, they're in the hundreds of percents and everything right now. Hopefully, Trump is gonna knock this out the park, and we killed it. So today we made money. We made money on the way down from open, and we've been making money from the bottom all the way up here. And that's what it's about, man. It's about definitely efficient trades. You want efficient trades. You don't want all that in and out. And right now, we just eating right now. We just eating right now. We just eating right now, y'all. We just eating. All right. So now we gotta think. What's the next move? What's the next play? What's the next move? What's the next play? Now we got some meat on the bone. We got a couple 100% of control of the contracts that we currently have. So that's good. Now it's all about decisions. We got to make decisions. It's all about decisions. Decisions. You know, I made really good decisions and I made really bad decisions. It just so happened that my bad decisions were just they were fat fingers. My mistakes. So I've been making really good decisions, but I had that one. I I had that one mistake. That was it. All right, they got a shake. This is a shake. This is a shake. This is a shake. We're about to see. This is a trap or this is a shake. If you're already up there, you're good. You know what? That's crazy. All right, so I'm making some decisions right now, some executive decisions. I'm selling some stuff, just some stuff, not everything. Um, I just want to lock in some of like you want to lock in profits. That's why you have multiple contracts. But the thing is, from the bottom, if you get them from the bottom, once you buy something from the bottom or the top, and it does that first run, if it's going to continue that trend, it's sealed. You don't touch those contracts because they're just going to run, and then you can go through the volatility of the up and down. It's cool because you got a lot of meat on a bone. You have a lot, and it's cool. You bought it for $33. It does this big spike. It's up to a buck 20. It's cool because now it goes down from a buck 20 to 100. You're good. You can hold it because you made a lot. But for other people, that's going to shake a lot of people off because they didn't buy it when you did. They bought it sometimes after you were right when it did that or something like that. So now they're trying to sell out of it or something. But it's cool. The only thing they doing is shaking the bush. And now it's going to keep running. And your contract is there. So now it immediately goes from 100 to 125. And that's how you see shit like that.
And that's how you're like, ah, damn, I sold your tune. And that's how you get to 1,000% or 900% or something, because you have multiple, and then you go through those stages of grief. All right. I made note. Get ready for that 11:45 drop. I remade a note. This is safe. All right. I say 11:45 in my notes. 11:55 rejection. How in 20? 20. On the money, baby. It's 12.
The market is turning right now. All right. What's going on? I'm sorry, I was just in my phone. I'm just sending out different invites and everything. So let's pop it back up. What's going on with these cons? Oh, we so safe. We so good. We Gucci. These guys going down ahead. Yeah, still up. Inf. Crazy. Crazy. But that's how that works. So today today was nice. Today was nice. All right, and they actually do got some downside protection too. That's kind of baked in with that. Let's take a look at what time? 13:40. All right, let's actually crack open some of this water ice. Let's have some water ice and Red Bull. I have a coconut berry Red Bull. I do Red Bulls. We're gonna make a little mixed drink. A little bit of Red Bull. Ooh, I might add some nut makers later. We're going to do a little bit of water ice. All right, we're going to the downside right now. I think we stand pat. I think we hold pat. Ooh, I think we hold pat. I don't think we do anything drastic. Oh, that is a red candle, boy. Mm, that is a red candle. Ooh, we are selling here. We are selling here. Bears are here. Sheesh, that came in crazy. No, we're still good though. We're still good. We're still good. Mm. I know what I do want to look at though. I want to look at the level of the contracts down here. These guys were up like crazy, but this is why you're supposed to have multiple. So then you can sell at different places. But you can be mad when you make your money. All right, so you didn't lose like 100% on it. This is a big dump. This contract, the highest this contract was at 11.55. It is now 178. It went from 258 to 173, but we bought it for 38 for $38. So from $38 to $170 isn't bad, but at one point in time you were able to sell it for $258. That's a whole another 75 bucks, 80 bucks from the high. That's big. That's big. Shit. But you still up though. You still made like 5, 6 times your money. Like, what are you doing? You just lost another 3 times your money. That's crazy. That's crazy. These numbers. That's why the entries are so important. Entries are so freaking important. Mm. Powell coming out soon, but I could be late to the party on the puts because it's turning. Mm. Puts are moving. Mm. Mm-mm. If you're watching, you don't want those zero dates. Go to the next day out. Go to the October 15th. Go to the October 15th. Those are the puts you want to look at. Those are the puts you want to look at. If you're looking at puts, If you're looking at any contracts now, you want to go to the next day out. You want to go to the 15th because that's going to give you true delta value. Yeah, I'm listening to my man's right now. I agree with him. Today is really bullish. They have a lot of people trapped, a lot of bears trapped. Those contracts went up 1,200%, 1,300% in like 40 something minutes. Fortunes were made. Fortunes were made on Friday. There's a lot of bulls. I mean bears. And then with yesterday, but yesterday wasn't too strong. No, yesterday was strong off the bottom. Because those bad boys were how much? Mm. The whole world, not just the U.S. economy, but the whole world is waiting for J Powell to hit this stage. He's in Philadelphia right now. I don't know how I have in chat right now. Anyone in chat? Wow, who else is on? I gotta get some other people on. I gotta get my technical people. There we go. Everyone else can shut the fuck up. Excuse me. Wow. Wow. This price action today is absolutely sick. Absolutely sick today. Oh, my phone. Take it off the freaking charger. Whatever. I have enough juice. I have to figure out what is this next move. What's gonna happen? Ooh, technically we didn't hit opening print. Really? No. No, we're good. Huh. Interesting. Mm, mm. Oh, that is good. Water ice and Red Bull. Mm, that's good, baby. All right. It looks like we are. Oh, here we go. How is here?
Note, I have greatly enjoyed my regular visits to your annual meeting and your conferences. It's really been my favorite venue all these years. It's a place.
Philly, whoop, 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 represent.
This is a place where we can talk about economic issues and not worry that someone's eyes might glaze over. I also appreciate the warm welcome I've always received here. And putting Fed staff aside for a minute, I can't think of a more lovable group of econ nerds anywhere.
Oh. Is that funny? I guess.
So thank you again for this prestigious award. And for the opportunity to speak to you here today. So As we all know, monetary policy is more effective when the public understands what the Federal Reserve does and why. With that in mind, I hope to enhance understanding of one of the more arcane and technical aspects of monetary policy, the Federal Reserve's balance sheet. A colleague recently compared this topic to a trip to the dentist, but I found that comparison somewhat unfair to dentists.
Yeah.
So today, I'll discuss the essential role that our balance sheet played during the pandemic, along with some lessons learned. I'll then review our ample reserves implementation framework and the progress we've made toward normalizing the size of our balance sheet. And I'll conclude with some brief remarks on the economic outlook. So, one of the primary purposes of a central bank is to provide the monetary foundation for the financial system and the broader economy. This foundation is made of central bank liabilities. On the Fed's balance sheet, the liability side of the ledger totaled $6.5 trillion as of October 8, and three categories account for roughly 95% of the total. First, Federal Reserve notes, that is physical currency, totaled $2.4 trillion. Second, reserves, funds held by depository institutions at Federal Reserve banks, totaled $3 trillion. These deposits allow commercial banks to make and receive payments and meet regulatory requirements. Reserves are the safest and most liquid asset in the financial system, and only the Fed can create them.
We are mooning.
The
Oh my
adequate provision of reserves
God.
is essential to the safety and
I
soundness
didn't
of
even
our
pay
banking system, the resilience and
attention.
efficiency of our payment system, and ultimately the stability of
Oh
our economy.
my God.
Third
Oh my
is the Treasury
God.
General Account, or TGA,
Oh my
currently
God.
about $800 billion, which is essentially the checking account for the federal government.
Oh
When
my
the Treasury
God. Oh
makes
my
or
God.
receives payments, those flows affect dollar
Oh
for
my
dollar the supply of reserves or other
God.
liabilities in the system. The asset side of our ledger consists almost entirely of securities, including $4.2 trillion of U.S. Treasury
Oh
securities
my
and
God.
$2.1
Oh
trillion
my
of government-guaranteed agency mortgage-backed securities, or
Yep.
MBS. When we add reserves to the system, we
Data,
generally do so by purchasing Treasury securities in the open market
This is for
and
my
crediting the
news.
reserve
I
accounts of
mean,
the banks involved in the transaction with the seller.
Notes, not
This
news.
process
Notes.
effectively transforms securities held by the public into reserves, but does not change the total amount of government liabilities held by the public. So, the Fed's balance sheet serves as a critical policy tool, especially when the policy rate is constrained by the effective lower bound, or ELB. When COVID-19 struck in March 2020, the economy came to a near standstill and financial markets seized up, threatening to transform a public health crisis into a severe, prolonged economic downturn. In response, we established a number of emergency liquidity facilities. Those programs, supported at the time by Congress and the administration, provided critical support to markets and were remarkably effective in restoring confidence and stability. At their peak in July 2020, loans from these facilities totaled just over $200 billion. Most of these loans were quickly unwound as conditions stabilized. At the same time, the market for U.S. Treasury securities, normally the deepest and most liquid market in the world and the bedrock of the global financial system, was under extraordinary pressure and on the verge of collapse. We used large-scale purchases of securities to restore functionality to the Treasury market. Faced with unprecedented market dysfunction, the Fed purchased Treasury and agency securities at an extraordinary pace in March and April of 2020. These purchases supported the flow of credit to households and businesses and fostered more accommodative financial conditions to support the recovery of the economy when it ultimately came. This source of policy accommodation was particularly important as we had already lowered the federal funds rate close to zero and expected that it would remain there for some time. By June 2020, we slowed our purchase pace to a still substantial $120 billion per month. And in December of 2020, as the economic outlook remained highly uncertain, the FOMC said that we expected to maintain that pace of purchases until substantial further progress has been made toward the committee's maximum employment and price stability goals. That guidance provided assurance that the Fed would not prematurely withdraw support while the economic recovery remained fragile amid unprecedented conditions. And we maintained that pace of asset purchases through October 2021. By then, it had become apparent that elevated inflation was not likely to go away without a strong monetary response. At our meeting in November 2021, we announced a phase-out of our purchases And at our next meeting in December, we doubled the pace of that taper and said that asset purchases would conclude by mid-March of 2022. Over the entire period of purchases, our securities holdings increased by $4.6 trillion. So, a number of observers have raised questions, fairly enough, about the size and composition of asset purchases during the pandemic recovery. Throughout 2020 and 21, the economy continued to face significant challenges as successive waves of COVID caused widespread disruption and loss. During that tumultuous period, we continued to purchase in order to avoid a sharp, unwelcome tightening of financial conditions at a time when the economy still appeared to be highly vulnerable. Our thinking was, was informed by recent episodes in which signals about reducing the balance sheet had triggered significant tightening in financial conditions, and we were thinking of the events of December 2018 as well as the 2013 taper tantrum. Regarding the composition of our purchases, some have questioned the inclusion of agency MBS purchases given the strong housing market during the pandemic recovery. Outside of purchases aimed specifically at market functioning, MBS purchases are primarily intended, like our purchases of Treasury securities, to ease broader financial conditions when the policy rate is constrained by the effective lower bound. The extent to which these MBS purchases disproportionately affected housing market conditions during that period is challenging to determine. Many factors affect the mortgage market, and many factors beyond the mortgage market affect supply and demand in the broader housing market. With the clarity of hindsight, we could have, and perhaps should have, stopped asset purchases sooner. Our real-time decisions were intended to serve as insurance against downside risks. We knew that we could unwind purchases relatively quickly once we ended them, which is exactly what we did. Research and experience tell us that asset purchases affect the economy through expectations regarding the future size and duration of our balance sheet, so that when we announced our taper, market participants began pricing in its effects, pulling forward the tightening in financial conditions. Stopping sooner could have made some difference, but not likely enough to fundamentally alter the trajectory of the economy. Nonetheless, our experience since 2020 does suggest that we can be more nimble in our use of the balance sheet and more confident that our communications will foster appropriate expectations among market participants, given their growing experience with these tools. Some have also argued that we could have better explained the purpose of asset purchases in real time.
Right now. His name is Jerome.
There's always room for improved communication, but I believe our statements were reasonably clear about our objectives, which were to support and then sustain smooth market functioning and to help foster accommodative financial conditions. Over time, the relative importance of those objectives evolved with economic conditions, but the objectives were never in conflict. So at the time, this issue appeared to be a distinction without much of a difference. That's not always the case, of course. For example, the March 2023 banking stress led to a sizable increase in our balance sheet through lending operations. We clearly differentiated these financial stability operations from our monetary policy stance. Indeed, we continued to raise the policy rate through that time. Turning to my second topic, our ample reserves regime has proven highly effective, delivering good control of our policy rate across a wide range of challenging economic conditions while promoting financial stability and supporting a resilient payment system. In this framework, an ample supply of reserves ensures adequate liquidity in the banking system, and control of our policy rate is achieved through the setting of our administered rates, interest on reserve balances, and the overnight repurchase rate. Reverse repo rate, rather. This approach allows us to maintain rate control independently of the size of our balance sheet. And that's important given large unpredictable swings in liquidity demand from the private sector and significant fluctuations in the autonomous factors affecting reserve supply, such as the TGA. This framework has proved resilient whether the balance sheet is shrinking or growing. Since June 2022, we've reduced the size of our balance sheet by $2.2 trillion, from 35% to just under 22% of GDP, while maintaining effective interest rate control. Our long-stated plan is to stop balance sheet runoff when reserves are somewhat above the level we judge consistent with ample reserves conditions. We may approach that point in coming months, and we are closely monitoring a wide range of indicators to inform this decision. Some signs have begun to emerge that liquidity conditions are gradually tightening, including a general firming of repo rates, along with more noticeable but temporary pressures on selected dates. The committee's plans lay out a deliberately cautious approach to avoid the kind of money market strains experienced in September 2019. Moreover, the tools of our implementation framework, including the standing repo facility and the discount window, will help contain funding pressures and keep the federal funds rate within our target range through this transition to lower reserve levels. Normalizing the size of our balance sheet does not mean going back to the balance sheet we had before the pandemic. In the longer run, the size of our balance sheet is determined by the public's demand for our liabilities rather than by our pandemic-related asset purchases. Non-reserve liabilities currently stand about $1.1 trillion higher than just prior to the pandemic, thus requiring that our securities holdings be equally higher. Demand for reserves has risen as well, in part reflecting the growth of the banking system and the overall economy. Regarding the composition of our securities portfolio, relative to the outstanding universe of Treasury securities, our portfolio is currently overweight longer-term securities and underweight shorter-term securities. The longer-run composition will be a topic of committee discussion. Transition to our desired composition will occur gradually and predictably, giving market participants time to adjust and minimizing the risk of market disruption. Consistent with our longstanding guidance, we aim for a portfolio consisting primarily of Treasury securities over the longer run. Some have questioned whether the interest we pay on reserves is costly to taxpayers. In fact, that is not the case. The Fed earns interest income from Treasury securities that back reserves. Most of the time, our interest earnings from Treasury holdings more than cover the interest paid on reserves, generating significant remittances to the Treasury. By law, we remit all profits to the Treasury after covering expenses. And since 2008, even after accounting for the recent period of negative net income, our total remittances to Treasury have totaled more than $900 billion. While our net interest income has temporarily been negative due to the rapid rise in policy rates to control inflation, this is highly unusual. Our net income will soon turn positive again, as it typically has been throughout our history. Of course, having negative net income has no bearing at all on our ability to conduct monetary policy or meet our financial obligations. If our ability to pay interest on reserves and other liabilities were eliminated, the Fed would lose control over rates. The stance of monetary policy would no longer be appropriately calibrated to economic conditions and would push the economy away from our employment and price stability goals. To restore rate control, large sales of securities over a short period of time would be needed to shrink our balance sheet and the quantity of reserves in the system. The volume and speed of these sales could strain Treasury market functioning and compromise financial stability. Market participants would need to absorb the sales of Treasury securities and agency MBS, which would put upward pressure on the entire yield curve, raising borrowing costs for the Treasury and private sector. Even after that volatile and disruptive process, the banking system would be less resilient and more vulnerable to liquidity shocks. The bottom line is that our ample reserves regime has proven remarkably effective for implementing monetary policy and supporting economic and financial stability. So I will close with a brief discussion of the economy and the outlook for monetary policy. Although some important government data have been delayed due to the shutdown, we routinely review a wide variety of public and private sector data that have remained available. We also maintain a nationwide network of contacts through the reserve banks who provide valuable insights which will be summarized in tomorrow's Beige Book. Based on the data we do have, it's fair to say that the outlook for employment and inflation does not appear to have changed much since our September meeting 4 weeks ago. Data available prior to the shutdown, however, show that growth in economic activity may be on a somewhat firmer trajectory than expected. While the unemployment rate remained low through August, payroll gains have slowed sharply, likely in part due to a decline in labor force growth due to lower immigration and lower labor force participation. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. While official employment data for September are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue their downward trajectories. Meanwhile, 12-month core PCE inflation was 2.9% in August, up slightly from earlier this year, as rising core goods inflation has outpaced continued disinflation in housing services. Available data and surveys continue to show that goods price increases primarily reflect tariffs rather than broader inflationary pressures. Consistent with these effects, near-term inflation expectations have generally increased this year, while most longer-term expectation measures remain aligned with our 2% goal. Rising downside risks to employment have shifted our assessment of the balance of risks. As a result, we judged it appropriate to take another step toward a more neutral policy stance at our September meeting. There is no risk-free path for policy as we navigate the tension between our employment and inflation goals. This challenge was evident in the dispersion of committee participants' projections at the September meeting. And I'll stress again that these projections should be understood as representing a range of potential outcomes whose probabilities evolve as new information informs our meeting-by-meeting approach to policymaking. We'll set policy based on the evolution of the economic outlook and the balance of risks rather than following a predetermined path. And with that, thank you again for this wonderful award and for inviting me here today. I look forward to our discussion. Thank you.
Do you need your iPad or no?
No, I didn't.
Thank you, Chair Powell, for the excellent remarks in the Adam Smith address, and we will have about half an hour for questions. So
Sounds like a long
should
time.
have talked longer.
Half an hour is a
So
long
let
ass
me
time.
start
That's fucking
with,
1 o'clock.
before I go to some of the questions coming in from the audience, and do use the Connect app to generate
they're about to
those.
squeeze this time.
You have said, and you repeated again
to
here,
squeeze
that there
this
are
one
no
bit,
risk-free paths for the Fed now. So in light of that, and in particular, with where the recent inflation data are running, let me group this with some of the questions that we're seeing coming in on the app as well. Obviously, always data dependent. But thinking about the dual mandate of maximum employment and price stability, how concerned are you that if the rate of pass-through of tariffs is slower, that might begin to look like more persistent inflation as opposed to a one-time, as if the tariff adjustment came through all at once, and then it would be quite clearly a one-time price level shift?
So that's certainly a risk. You know, as I mentioned, there really isn't a risk-free path now, since it appears that inflation is certainly running above our target and appears to be continuing to increase quite gradually, but increase. It's still on the way up. So there's a risk there that would lend to greater persistence. But now the labor market has demonstrated pretty significant downside risks as payroll jobs have declined, and both the supply and demand for labor has declined quite sharply. So, those two states of affairs for our two goal variables, call for different monetary policy responses. So, as they come more into balance, I think the idea has been that policy should move from being, to some degree, to being more neutral as those two things balance out. But it is clear, though, that if we move too quickly, then we may leave the inflation job unfinished and have to come back later and finish it. And if we move too slowly, there may be unnecessary losses, painful losses in the employment market. So we're in the difficult situation of balancing those two things. I think for the last few months, we've been able to maintain a restrictive stance because the labor market was still pretty solid. I think that the data we got right after the July meeting showed that, which adjusted back all the way through May, showed that the labor market has actually softened pretty considerably and puts us in a situation where the two risks are closer to being in balance.
Let's move to the other risk then and talk about employment a little bit. We had Anna Paulson here yesterday, and she spoke about the break-even unemployment or break-even employment growth rate. And that's a question from the audience as well. So I believe she said that it's certainly lower than it was, and the standard error around those estimates probably includes some numbers that might even be negative. Where do you see the monthly break-even employment growth rate at this point?
I'm not going to try to give you a pinpoint number, but as you pointed out, the standard error around these things is
That's how you hit
50,000
1,000%,
plus or minus,
just like
something
that.
like that. And that would certainly,
That's how
I
you
think
hit
the range of
1,000%,
plausible
just like that.
numbers for the break-even rate
That's how you
is
hit
probably
1,000%.
does go below zero, accounting for those standard errors. It's clearly come down a great deal, and that's what's so challenging about this is that both supply and demand in the labor market have come down so sharply, so quickly, and the fact that the unemployment rate has barely moved is kind of remarkable in and of itself, and suggests that they're moving at roughly the same pace. Although, of course, the unemployment rate has ticked up, which suggests that demand is moving a little faster than supply. I wouldn't want to point to a specific number other than to say that it's come way down.
1,100%.
And there are many, many estimates out there. By the way, there are many ways to calculate it, so you're going to get different estimates.
We're certainly in a volatile and changing environment. So one question I have is whether you see any changes in the transmission mechanism of monetary policy actions. So when we speak of long and variable lags, as we do, are those changing? And in particular, do you think there might be any difference in the impacts of policy on inflation versus employment? Is one changing more than the other?
That's like 2 or 3 questions, so
I'm
I might have to
sorry.
come back to you. That's all right. So on transmission, there, in theory at least, I see 2 things. One is, what we say and the actions that we take on monetary policy and how quickly that gets into financial markets. So if you go back to when I was in college, that part would have taken, weeks, months probably. And now that part happens essentially instantaneously. But the rest of it, once it's in the financial markets, how quickly does it affect economic activity, unemployment, employment, inflation, et cetera?
You have OPEX rules.
I think that's more dependent on the conditions in the economy. For example, if you take the group of people who had extremely low rate mortgages, right? And so if you can cut rates, but they're a long way down, and they're sort of in a place where it's going to be expensive to move and to take out a much higher rate mortgage, even assuming significant numbers of cuts. So that has probably
I get a
blunted
300%er every day.
the transmission
200,
of
300,
lower rates into
400.
that part of the
Stretch.
economy.
It depends on the day.
But overall, I think it's
A day like this is
I
how
think
you
it
can
still
get
works the
big
way
runners.
I think it works, which is long and
Huge
variable
runners.
lags means a lot of uncertainty
You know,
about how it's being
this is
affected.
how you
I think
do it.
the last part of your question,
Let's
the
go.
lore has been that
Let's
inflation
go.
comes later. The first decisions are purchasing decisions, hiring decisions, and things. Well, purchasing decisions are affected
That felt
Bit of
good.
cover.
a lot of uncertainty.
Oh,
So
that felt
you spoke
good.
about the
I'm sorry. That felt good.
adjustments or the challenges
I
that
know
you're
how to
facing
do
with
it, baby.
some government data not
I
currently
know how to fucking do
published.
it. Let's go.
Beyond the headline unemployment rate, which we're
Oh
not
my
going to see right
God.
away, what other labor market indicators are you monitoring most closely
October
to gauge
31st.
that side of things?
I'm ready for that.
So we're
I'm ready for
everyone's
that.
looking at the same non-government data. So there's a set of
Because I kept the
non-government
last
data
one. I
around,
kept the last
or
one.
non-federal government data around labor markets. For example,
That's how I
state-level
arrived here with that
unemployment,
idea. Because
claim
I seen it
reports.
like years
You can
ago,
total, you can add those
but
up
just
and get a
recently
pretty
just
decent
started putting it into
estimate.
practice. I watched
That's a
it
really
for
good one. There's
about like
also
6
ADP
months, you know,
has
a couple of
its
the
data on
meetings, and
unemployment.
it's
So
like,
in the employment
okay.
space, there's
1,200%.
plausible data. I will say generally,
I have 3 contracts over
the private data,
1,100%.
the alternative data that we look at is better used as a supplement for the underlying governmental data, which is the gold standard. And it's not as, it won't be as effective as the main course as it would have been as a supplement. So we don't expect that we'd be able to replace the data we're not getting. So I think in job, in employment space, there's some pretty good substitutes, less so in inflation space and in economic activity space. And also they're just, they're different private data providers use different universes and different levels of rigor in their data analysis. So, you know, we're looking at lots of things, and we're going to make our decisions according to the FOMC schedule. But I think it will be a lot better once we start getting, for example, the September employment report is going to be a very important report, and we're not on track to have that. There would still be time for us to get that. We will get, of course, the September inflation, CPI and PPI reports. So that's a positive.
I was so fucking late
we're
to that.
we don't comment on fiscal matters, but from our standpoint, we start to miss that data, and particularly the October data. If this goes on for a while, they won't be collecting it, and it could become more challenging.
You used the term gold standard, and you didn't mean it in this context, but I'm going to pivot here because there's a question from the audience that's getting a lot of upvotes.
All types of comments everywhere.
So one of your predecessors, Alan Greenspan, used to view the price of gold as an indicator of inflation risk.
This is absolutely incredible.
So in that context, how do you view the rally that we've seen in gold? And if you want to throw in Bitcoin, you can comment on that too.
I'm not going to comment on any particular asset price, including that one. And I think we think of inflation as driven by fundamental supply and demand factors, and it's not something we look at actively.
Okay, fair. The September projections, we saw revised GDP growth projections revised upward for both 2025 and 2026. Now, sometimes it's just an issue-to-issue thing, but how do you reconcile that projection of stronger growth with what we're seeing in terms of a likely weakening labor market?
Incredible.
So even subsequent to the September SEP, we've seen economic activity data which are surprising to the upside. And as I mentioned in my remarks, so you do have a bit of a tension there between the labor market data that we see, very low levels of job creation, and yet people are spending. So economic activity is strong, and it's we're going to have to see how that plays out.
To my stream when I make
right now, of course, we're not getting any new government data on that, any new federal government data on that. But it does create, of course, if economic activity were stronger, then that would tend to support labor market activities and hiring. So we'll have to see how that works out.
All right. Another topic that has permeated the conference over the last 2 days has been AI. So as the Federal Reserve, like all of us, grapple with the implications of generative AI, what plans are in place to assess its long-term impact on productivity, implications for labor markets, and overall economic stability? And does that present any new risks to monetary policy or financial stability?
So you're right. We're doing what other people are doing, which is...
Oh my God! I didn't even see that jump.
I mean, so many researchers are working.
Oh my God!
It's just amazing. And so we follow all of that. We also have people at the Fed who are doing lots and lots of research on AI. And, in terms of...
Am I about to hit a fucking like 2,000%?
To be looking for the kind of things that will happen. So, the question of productivity, was it Robert Solow who said that technology is showing up everywhere but in the productivity data. So this could be the same kind of thing where it's there, but it takes a long time to show itself, because you would think of another big technological advances potentially raising productivity, but I think it's early to say that we're seeing it. Also, you're seeing, I think some researchers have found effects on hiring from AI for entry-level people and for coders and things like that. So there's probably some of that out there, but it's just so early to say what it will be. We also monitor very carefully what public companies are saying. Increasingly bold statements from mainly large private companies on things that they think they can do across their whole business area with AI, and either sort of freeze hiring where it is or reduce hiring. And I think we're pretty aware of what the potential outcomes are, but the range of potential outcomes is very broad. I will say, in terms of what the Fed can do, we deal with supply and demand. We have an interest rate, and we also do regulation, that kind of thing. But if what's needed is greater education and skills. I mean, I've always liked the model that technology can work for everybody as long as everybody's getting the skills and aptitudes they need to use that technology. This is
getting really
Katz,
frothy.
their work,
Be
which they actually
careful.
spoke about at Jackson Hole this year, but it's a 20-year-old book that they wrote. So we can't do that. That's not something the Fed can do. We also can't address the potential societal disruptions that could happen, potentially, if there's really significant job loss. So there are a lot of, we're the least of it. There are potentially really significant implications for people in the labor force. And I think we're all speculating about what those might be, but it's only the beginning of this story.
Thank you. Looking at some of the other questions that are getting upvoted, and you can get as far into the weeds as you want, but this is where people want to go. So let me try this one. As you think of the appropriate level of reserves in the system, what indicators are most important? Is it the price of money, so repo levels, or the volume of borrowings from the Fed, like the discount window, and so on?
So we have a nice spider chart and 5 main indicators, one of which is sort of repo
All right, I'm
levels.
putting on the stop limit on everything.
Overall, what they're showing is
I'm
that
gonna
we're
let
still at
things
ample
run,
reserves.
but I'm putting up a tight
abundant
stop
reserves.
limit.
We're still
What
at
time
abundant
is it?
reserves, meaning
51.
above our goal
So we're
of
into a new
ample
cycle.
reserves, a little bit above ample
So
reserves.
let's make
but
sure
we're
we
beginning
really
to
lock in the
see-
profits
You're
here.
starting to see
All right,
a
we
little bit
have
of tightening in
we
money
are
market
making
conditions.
we're doing really well
Particularly
today.
repo rates have moved up.
We're doing extremely
And,
well
Those
today.
are the things we're going to be watching. So we think we're
500%
still at
on this one.
abundant.
Oh my
And
God.
the pace
So
of
this stop is
runoff is now very,
definitely
very slow. So
through.
we're going to be
This
watching all those factors
667.
very carefully.
My
And
667.
we're not so
Yeah,
far
this is
away
crazy.
now, but
So we're gonna
there's a ways
put
to
this
go.
at stop limit
I
at
think we're not going to get away without addressing this one, so I'll try to, again, group some of these
5.
together. First, there's definitely appreciation from the audience and your ability to try to remain above the political fray. And I think also, and as in your
That's
remarks, you said
incredible.
gradually and predictably, and that sounds really nice.
So, so let's
right
sell
about
one of these
now,
at this
but,
high price. I have other ones on the
with
stop
those,
limit,
that
but
ongoing scrutiny
I'm
of
starting to
policy
shave and cut
decisions
right
of the
now.
Fed, what measures
We
is
want to
the
get
Federal
fat.
Reserve taking,
Pigs,
and are
remember,
you taking
hogs
to
get
ensure
slaughtered.
and demonstrate
All right,
the
pigs
continued
eat, but hogs
independence
get
in single
slaughtered.
monetary policy?
So the main thing
Don't
we
get
can
slaughtered out
continue
here.
to do is to do our work the way we've always done it, which is think really carefully about evolving economic conditions and the evolving outlook and the balance of risks, and try to make good decisions to best serve the American public, and then explain those decisions and talk about them in a way that makes sense and is grounded in the data and our overall approach. I think we're going to keep doing that, and as long as we're doing that, people will be able to tell. If we start doing something else, I think people will be able to tell that too, but that's just not something we're ever going to do. We're always going to keep doing our work. We don't engage in back and forth with people. It's just not, that gets to be political sort of right away, so we just do our work and do it as best we can. I mean, overall, I would say the Fed comes through the last, if you think about it, go back to the beginning of the global financial crisis. We've had 2 world historical crises, back to back essentially, and the U.S. economy, it's been quite a ride for the U.S. economy and for American citizens, but we've come through it as well or better than any other country in the world. And we had to innovate and did innovate. There was really no choice. We can look back now and as I did today, and second guess ourselves, which is only appropriate. We've been doing it for 10 years. Since I got to the Fed 12 years ago, we were already doing
I don't really care about the money. I just care about
that's
fucking
an ongoing
being right.
process.
I
think
that's all I care about. I don't even care about the
is
money.
a government agency
The money
that
is like,
does
all right, that's
a
a side effect to me.
for the public that it serves.
Like,
and
I
that
care
is
about
that is
being
our
right.
only goal. And I think we do it pretty well. Don't look for perfection. These are close calls that have to be made in real time.
Yeah, I thought so.
But
I'm about to say, I don't
guess
see
that's
the
what
whole
I was saying.
story here.
It's
I'm looking at
fantastic.
these
And
numbers,
in
and
that
that chart
context,
wasn't
then, internally,
changing.
to the
I'm like,
FOMC,
wait, the whole story. I'm
how
like,
important
wait,
is it
no.
that you have
What is
consensus
this? I'm
on
being
it? I mean,
bamboozled.
we're economists. We understand the
XPS
value of
spot, we want
spirited
UVix right
debate
here.
and But is that important in terms of communicating the results and the
SPX,
decisions
you're
of
up
the committee?
here.
I mean, consensus is great, but I mean, the most important thing of all is to get
There
it
we go.
right.
Okay.
And
I'm
you know,
like,
you come to
what's
places.
going on? Okay, there we go.
not-
There we go. Some
not
of my
very
stop limits and
commonly,
everything.
but sometimes you
triggered,
come to places where people are going to have different views, and this is one of them. You have a situation here where literally inflation's above target and gently rising.
All right. Well,
The labor market is
today was awesome.
pretty clear.
We made a lot of
downside
money today.
risks. What do you do? How do you think
We
about
made a
that?
whole lot of
That's
money
not
today.
a problem that
A whole lot of
face
money
very
today.
often in central banking and the economy.
You know, I don't discuss
People
numbers.
are going to have different weights and
I
different
usually
risk
just say like
aversion
a lot of
and,
money, or
different
I
risk
talk about like
appetites on those
percents
things. It would be
and
kind
the
of
different
surprising
contracts and
if
everything
you
that I
had
got.
no debate over those things. So
you
we
know,
have a
so-
healthy debate going. I think it's very healthy.
You know,
think
so you
these
got to be here
meetings that
live
we've been
in order
having
to like
are
get the
as
money,
good as any we've
you know,
had
from
in
me.
terms of people sincerely.
I don't have like a
giving their
paywall
absolute
or
best
anything,
argument for
but
their
I do want to
positions,
get
but
my
they're different
viewership
positions.
up, and I want to
That's,
get my likes up and
when I
everything
was an
like that.
investor,
And
I
I'll
always
make you
felt
money.
like
I'll
the
make you
most
thousands of
dangerous thing
dollars
is if
every
everybody
day. I'll make you
agreed on
thousands and
something,
thousands.
'cause
You know, you don't even
you
have to
need
do
someone
anything.
to
You
come
just got to
in and try
show
to
up.
explain
You know,
why
if you
this
just
is a
show
terrible
up,
idea.
I'll happily
Hopefully
make
somebody
you.
really
You know,
smart.
I'll make you
and that
thousands
would
of
give you
dollars
the
every
ability to
day.
really test your
It's
thinking.
just that
So I
you
think
just can't
that's
show
a
up.
healthy discussion.
You know,
that we're
take some of
having
my
right
notes
now.
and then be
And
like,
I'm not at all
oh, you
surprised
know,
that we
and
have
leave.
people across
You know,
the
you
board. I
gotta
do think we
stay.
also, as an institution,
No,
do
fuck.
try to
You don't
come
even gotta
together
talk to me. You
around,
just gotta
you know,
fucking give me view
a
time.
central
Shit, man.
answer.
But I'll make you
And
thousands
that's, of
every
course,
single day.
part of what I try to do.
I'll make you
is,
absolute
find an answer that will
thousands
attract
upon
as much support
thousands,
as possible.
like every day.
Absolutely.
Depending on how
I
much
know
money
you probably
you have.
won't want to comment in great
You know,
detail
and
on
I'm not a
global
bear, I'm not a
conditions, but there are a
bull.
few questions
I'm just a
around
trader.
that, and what that
So
implies
it's
for
like
U.S. monetary policy, and also just looking at the interest rate differentials between the U.S. and other advanced economies, and how long that could persist, and is there a risk there?
Sorry.
The interest rate differentials between the U.S. and other advanced economies.
Yeah, I mean,
That's so
we set
sick.
interest rates according to, the place where our economy is domestically. Taking into account
Sick.
international aspects of our economy. So again, it's not surprising. Many factors. But, for example, tariffs are clearly more disinflationary for countries that are subjected to them, and they're more, I won't say heavily inflationary, but there's some inflationary
Incredible.
to consumers. Countries that are putting tariffs.
I know how to find them.
So
I know
these
how
are
to
very
find the
different
contracts
monetary
now.
policy
I know how to
response
do it.
potentially just in that.
Game over. Game over.
As every other central bank does, they're setting rates.
Game over.
Geographically, and they're going to be different answers. It's not unusual.
All right, so we got a mark
So
today.
we have
Today
a
was
large
an
number
important
of
day.
economists
Today is a
and
really important day for my trading
as
profession
we look
right
back
here.
and,
Because today was a big
it's a
milestone.
momentous award. It's a nice time to
You know,
reflect.
all these notes, the journal,
If you looked
everything,
back
all that was huge.
on your early
We're going to,
career
oh,
and your early
664
goals, how do you
pre-market,
think
yep,
that
663.
young Jerome Powell would
Yesterday,
view where Jerome Powell is
663.70,
sitting
yep.
today as chair of the Federal Reserve?
That was yesterday pre-market high.
Surprised.
And
No, I
that
would
was
say,
yesterday's close. That was
so
SPY's close
what I would
yesterday.
tell
Well, I mean,
young
we're in
economists
664.
is you've chosen a
Technically,
great
not even
profession,
663. We're
a tremendous
664. We're
profession.
higher.
You're getting
So
the
no,
tools
go through
to
that.
analyze public policy and what works and what doesn't work and what should
Incredible.
be expected to work and wouldn't and why.
Freaking
And also
incredible.
what's the state of the economy.
Incredible.
Guess what?
Incredible.
It's basically impossible. But it's very difficult.
Incredible. Oh my God.
It's just an incredible
Oh
subject that
my God.
to do really good things for the general public, who may not feel great gratitude toward economists, but sometimes. But no, it's really important. You made a great choice, and I would say, wish you the best of luck.
Thank you. Agree. Okay, we'll do a little bit of a lightning round here. We have about 5 minutes left, so I'll ask a bunch of questions that you may not want to get into great detail on anyway. Some of these are pretty straightforward, but So we talked quite a bit about labor markets, but we have not specifically asked the question about
Wow.
the effect of
Wow,
inflation
wow,
policies on
wow.
labor supply.
Yep, so that's over. So, I mean,
How restrictive
if you got in, you're in.
policy is,
The
and
day's
is
over
that
for me. The day's like
As far as
over.
immigration policy.
Yep.
Yeah, let me start by saying that we don't have a view on immigration. It's not our job to have a view, so
I am
we take
going to
that as
leave out of here when
completely,
Powell leaves.
you know, it is what it is. We take it as it arrives.
Absolutely incredible.
More, I'd say
Absolutely
stronger
incredible.
policy than most people had expected.
We
You know,
did
we've
everything
seen,
right.
You know, very sharp.
We set up our
decline
stop losses.
in growth of the labor force and
We hit all of our points.
people entering the country.
We hit our pre-market target.
And yeah, I
We
think
knew what we were going to hit pre-market. We knew what we wanted pre-market. We knew what we were going to do with our homework last night in our notes. We knew how much the contracts were. We knew the price that we were going to look for them around.
That's a big economic
You know,
factor. So
it was awesome. It's all about the notes.
You know, fewer people to work.
It's all about the notes.
You have anecdotal evidence.
1014. So just put in our ranges right now, and we are going to head out of here
in wages or anything like that at this point.
in a little bit. We're going to let them talk. 653.
But yeah, it's going to be a really
0.17.
important
It's all about the notes.
because that, you know, that's new people who come into the workforce. They create their supply, but they also create demand. They create their own demand, and you know, again, from our standpoint,
So we don't have our high yet. We opened at 657.
And that will depend both on the supply of workers and the
15.
demand for
What
workers.
a freaking trade.
Back to
What
the
a
balance
freaking
sheet,
trade. We were looking for
some
the gap fill.
questions. Again, I'll kind of group these
So we were looking. So we knew we were going for the downside.
mortgage-backed
We were looking for the
securities
downside.
and
So
housing
you know, we didn't expect it
affordability.
to be rushed in so
Again,
quick. So
not
we boom,
exactly part of
we
the
got into the
mandate, but
downside. We
if
hit
I
that
ever
trade.
look at any specific
We bottomed
actions
out
with
down
regard
there.
to
Then that's when I start shopping
MBS,
for
affordability
cons,
or
for
affordability
contracts.
housing.
That's how I know how much those contracts were, and that's how I
look at
know
overall
about the
inflation
1,000%ers and everything.
and,
So I start pricing some things out.
we don't
I
look
didn't go for the more
look hard at
expensive
housing
ones because I'm like,
prices
yo, they're
and
more
also by
expensive, but I did go
and
for the
affordability.
cheaper ones. And I was keeping an eye out of everything in between.
Security purchases as a way of addressing mortgage rates
Oh
or housing.
my
demand.
God.
That's not what we do. We do
That
have, as I
is-
mentioned, a very
and
large amount
I
of
hit I
mortgage-backed
can hit a
securities and they're running
1,200
off, but they're on very
percenter. I can hit a
slow.
1,000%er.
So
At least once a week, sometimes 2 times a week.
Question on the beverage curve.
ah,
Maybe that's
I
not a
hit,
lightning round question, but let's try
you know,
it.
300 and
So
400s
do you
every day.
think that the shift in the beverage
You know, but that's
curve
just
is
how
a
much money you
structural
got.
shift
You know,
or just a
300%
blip?
on $40. Well, I mean, that
think
can be
it's,
something. You know,
you're at a
you throw
place
$200 on that 300, 400%.
further,
Ooh, well, you know,
declines in
so
job
you know,
openings
it depends
might
on
very
your
well
risk
start to show up in
tolerance.
unemployment.
Wow,
You've had
what
this
a freaking
amazing
day.
time where you came straight down.
1014, 1014. So we have our
You know, I just think you're
low.
going to reach a point.
I just want to put these in my notes too, so I don't have to do them later on.
We haven't really.
So
we may be
far,
hitting
low
that
is
now, but it's been
65317. We know
remarkable
that.
how that line
Our
just
open
comes
is
down, down, down,
657.
down. And
65715. So that was a whole 10-point move.
been
Woo!
really a
You
great
hit that
part of the
G stack.
recovery.
That was crazy. We have our watch
Well,
list
we have just a couple minutes left.
for
I
our
think
metals, our rare earth
we'll
metals.
end with
We're going to do
with
some
maybe,
research on those
another
later on.
sort of philosophical
I guess I can
question.
probably do that now.
Michael Barr spoke to the policy conference in 2024, I believe it was, and he gave some advice to economists. What would your advice be to the economists in the room in terms of how we
QQQ.
can
Did I
best
put in
serve
QQQ ranges, right?
the
Yeah, we
challenges
did.
that are facing us
This is where
collectively
we
at
are
this point?
now.
I'm inclined to say
Box
keep your
range.
heads
We are
up.
on the
It's a
upside of the
time
box
when people are
range
challenging
right now. Wait,
expertise.
667? No,
And,
we're on the upper end of the
and, you know, I
box
think
range,
it's a distinguished
going
profession. It's
towards
a
it
very
right now.
high
So we're
order
about to go out of the
profession. You should
range,
be
the
proud
upper
of
end
your
of the
work
range.
And keep at it. You know, I mean, ultimately, we're learning about how the economy works and how society works. We're
We're in the
understanding is so
highs.
basic
We're
and so
out of the
uncertain, really
lows.
still after all these years. But you know, you got to think we're making some
So
progress
my
and doing
notes,
some good,
these are the
and
contracts
imposing
that my
you know,
notes
sort of
were
an
telling
analytical
me right
framework
here.
around the kind of decisions
This
we
is
make
exactly
about
what
the
I have
economy. So
in
I
my
just wanna
sheet
give you a vote of support and say keep at it.
right here.
And likewise, NABE supports you.
666.
Thank you so much.
Thank you. Thank you. Thank you very much.
And then I woke up at 5 something and then added this. I think it was 5 something. 663. Now the puts I was looking at, but these were already destroyed. These were mightily destroyed already. 659 puts because we already dropped so much. So I had to get a new set of puts, but my calls on the other end, these were my calls, these were my cons. I actually didn't even write anything for QQQ, so I don't have anything even in my notes for QQQ, so I'm not gonna put anything down because it doesn't make any sense to, because I don't want someone to look at it and be like, oh, you know, no, because I don't have anything. But I'm gonna turn this off. Thank you. Oh, you can play. Get some eye candy. So yeah, no QQ. I did neglect QQQ. I said look for a switch around 1220. The 1220. What happened at 1220 at the 1220 structure? Oh, that was that little note down there. I said be careful around 1220. Nope, I was early. It wasn't 1220. It was 1253. I was early. I mean, I was early. I was early. It was at 1253, right? Yeah, 1254. It was at 1254. And look at that structure change. And I had that in my notes. I had it in my notes. That's crazy. I didn't put it here, but I had it in my notes. This is different. This was yesterday. This isn't now. Breakdown structure. Oh, so no, this is a new structure. So we can say going up. This was yesterday. Ooh, that's scary, right? Same spot, different things, same spot. That's crazy. Ooh. 1206. Yep, still up. Breaking structure going. No. This is too much. This is off. 1252. No. We're going to keep that, though. We're going to keep that. 1 p.m. breaking structure going up. Well, not really breaking structure because 1252, we ran down from 1252 to 1. To 1. Okay. All right. But yeah, in my notes I do have that. Look for the switch at 1220. But no, it happened a little bit early. I mean, later. I was early. It happened at 1253. I thought it was going to happen at 1220, but it happened at 1253. I have look for shorts around 45, 1145. Was I right about that? Yep, I was right about that. I was early though. You see, 1145 is here. The shorts didn't come in. They came at 1154. 1154 to 1208. So they shorted the market right there. Wow, my notes are. Oh my God, bro, it's all about the notes. You gotta take notes. I mean, you also gotta have a trade idea too. You know, that was my one trade idea. You know, but if we would have gapped up, I had a trade idea. If we gapped down, which we did, we had a trade idea. You know, I updated them throughout the night. I think like 9 o'clock the futures market comes out, and then at 12, I'll take another look at the contracts maybe before I start going to bed. Sometimes I wake up around like 5, so that's after 4. So that's when uh, the price and everything gets updated on Robinhood. So then I'll take a closer look. I'll try not to, pay too much attention just to get an idea and go to sleep so I can think about it and update the plan if my plan changes. Now, the time in which someone comes out to talk, so be careful. If you're still playing right now, if you're still trading, this 1 o'clock p.m. Now you're in a whole nother time structure. You shouldn't be in 0 days. If you're playing SPY, you should be a day out. If you're playing QQQ, you should be 3 days out already. This is past a certain time. In my notes, I put 1 p.m. Past 1 p.m., don't use 0 dates. Go 1 day out. That's in my notes. So do what you want. Yeah, but taking notes are very important so you can find out the levels that you're looking for throughout the prior days and everything. Uh, an anomaly like Friday, it hurt. That's why I didn't have much to say on Monday because Friday was an anomaly. What the hell are you going to do? With an anomaly. So but I had like a general idea. We still caught the trade on Monday. Looks like they're going to probably maybe try and retest for IWM sock sell, not doing too good. Open's been running all day. Open ran all day. It didn't do anything though. Ugh. Ugh. Did a bunch of nothing. Never mind on that. Yen did a little something. Hood did nothing. SoFi did a little something. These contracts are sick. So sick. It's hard for these to move because there's, oh my god. I'm gonna catch one of you motherfuckers one day. Yeah, today is nowhere but up all day. Today's gonna be nowhere but up all day. I mean, look, you better self protect yourself. They shook me out right here. They shook me out the top. It's cool because I still sold, somewhere near the top. But I'm not trying to risk all that. You know, if I want to go in there right now, I can go in there. No, we made money. We did really well. We did really well today. Holy shit. Oh wow, we did really well today. Yeah, I'm not going to complain. Too much. I fat fingered again. So okay, so I had one error today. I had one error today that I did 2 times, and after I did it the second time, I had to take a pause and take a deep breath so I can just refocus and not keep focusing on the error that I messed up. So I wanted to set a sell on a market limit on one of the contracts that I had. The stops were moving like maybe like 2 or 3 cents at a time, but I wanted to keep it kind of tight. And I set it a tight stop loss, of course, to the low end, and I didn't hit market, so I hit sell. I sold it was sold well above, what I bought it for, but I sold it for well under the current market value. I did that a couple times, and of course we break out to the top end. Okay, so that was just, that was a mistake compounded with opportunity loss because now that money, I can't use that money anymore, and I'm losing out on that appreciation. And that happened on about 5 contracts. That's a lot of fucking money that I fucked myself over on that mistake. Now I thought I was moving fluidly, and you know how you don't want to move too fast, but you want to move at the fastest speed you can do to hit the different buttons you have to hit. Well, I thought I was at that current, at that proper rate, but something happened and I didn't hit the stop market. So the stock market, it triggers a market order if the option price falls to the stop price. So you're going to have the current price, you're going to have your estimated cost, how much you paid for the contract, and then you're going to have your stop trigger price. I had my stop trigger price, it was above my estimated cost, but it was well below the bid ask. Well, not well below. If the bid ask was like 35, I put in like 31 because I wanted to have, or like 32 because I wanted a tight stop loss. So I had it like just underneath that so I can do it right. So, I fat fingered and then that led to more mistakes. And then I did it again and then I just had to take a deep breath because first of all, you have to move fast. You got to move fast. You can't be moving like a fucking turtle trying to expect to hit the execution on these contracts and you want to make good money, You're not going to do it. So you do have to move at a moderate speed, you know, and the decision making that you have to make, the decisions that you have to make are fast. You're making decisions all the time. At they have to be lightning speed because these charts are going fast. We're watching every tick. I wake up in the morning, I do my research, I watch my news, and then after that, I watch my charts and I look at these freaking candles. My 1 minute chart in the intervals down here, just 1 minute. That means every red or green thing is 1 minute. 1 minute. How many minutes are in an hour? Okay. Well, that's how many ticks I look at. How many hours are, in the trading day? Throughout the whole trading day, that's how many, so I'm pretty much counting like minutes and seconds, like all day. Okay. Because the time matters too. The actual time, what time it is matters with the contracts and what time someone's talking, what time this is going. This is why a Powell is never late. He might be late by like seconds. I think one time like a minute or something like that. Trump, hour, half an hour because they're pushing the market. They're messing with the market. Powell can't do that. Powell's late. The market fucking tank. Powell can't do that. What Trump says will tank the market. And that's just theta burning. So when you're trading these contracts, there's a lot of other things that comes into play. You're just not buying something and hoping that it appreciates, so then you can sell it at a higher price. You know, um, but yeah, today was an awesome day, amazing day. We hit some home runs, we hit some grand slams. This is what I do. This is what we do. Uh, especially every FOMC. As of late, we've been smacking them. We've been doing really well on those. Um, the notes have helped my trading maybe 400 or 500%. You know, I've been making more money trading. I can't say now that I ever have before because before when I was trading with a much larger amount of capital, I was still making. Well, there were times when I made like 10K a day. I made 10K a day a couple times, but I would average like 1K a day. I was using different strategies though, and it was a different market as well. There were different things going on. I was trading differently. I wasn't trading like this. I was doing something totally different. But that was actually quite important what I was doing. Um, it made me an incredible amount of money, but it also taught me a lot too. Like I said, I don't focus on the money. I focus on the education and the plays, on what I'm actually doing. That's the most important thing. Um, is to learn why. Not just worry about the money. The money's going to come if you pay attention. If you do good work, and I believe in that. Not just for the stock market, with anything in life. Paying attention is good. Very good. It's good to pay attention. Very good to pay attention. All right, Trump's done. I'm done. Love you guys. I'm out of here. If you're watching, thank you. If not, thank you. Uh, sick day, sick day, sick day,
To keep this thing moving in the
sick
upward
day,
direction. If you
man.
look at something like RGTI,
Wow.
right, this also is having a better
Wow.
day